Imagine this. You're scrolling through Zillow looking for that perfect home because you think that you're ready to buy. But what if you're not quite as ready as you thought you were? In this video, we'll talk about something that nobody talks about, the real hidden costs. Before we jump in, remember to hit that notifications bell and subscribe so you'll always be in the know on all of the home buying tips and strategies. Buying a house is a huge deal. And if you think that you're ready because you've been really diligent about saving for that initial down payment, then you need to listen. Before you jump into the decision of buying a house, there's something crucial that you need to know that nobody talks about. And that is the hidden costs of all of the surprise expenses. These can leave you feeling stressed, strained, and broke. All of these hidden costs is what we're going to talk about in this video. Most of the time when my buyers think about being ready to purchase a home, most focus only on that down payment. So it's important for us to discuss and decipher what is truly needed when you go to buy a house. One of the items that's not necessarily an extra expense, but it is something to be aware of because it is a critical part of the home buying process, and that is earnest money. So earnest money is good faith money that is given upfront into an escrow account to show the seller in good faith that you do plan on purchasing the home. The initial earnest money can be as little as $1,000 to $5,000 and it is fully refundable during attorney review. The balance of earnest money is due once you do all of the due diligence on the home that you're purchasing and decide that everything looks great. It's basically putting some additional money where your mouth is, that you are moving forward on the transaction. This money also goes into that separate escrow account with the initial earnest money. And all of that money does go towards that initial down payment on the cost of the home. The one item that really doesn't get talked about enough are closing costs. This covers all of the title insurance fees, the attorney fees, there are prepaid escrows, there are some prepaid items if you're buying into a condo association. There are some prepaid items if it's a brand new construction building. So all of those fees add up to about 2 to 3% of the purchase price. And it's really important that that gets taken into consideration when you're thinking about how much you need to save in order to be able to purchase a home. So the main two items that you have at closing are your down payment and your closing costs. Majority of buyers typically put down somewhere between 0% and the 20%. Some of the differences in those closing costs can be how much money you're initially putting down on the property, and it can also be based on paying points. And points are basically a upfront fee that you pay to lower your interest rate. This has been a pretty popular thing, especially when interest rates are on the higher side. It allows a buyer to pay that fee upfront of 1% or 2% of the purchase price in order to bring down what that overall interest rate is going to be. It's a really great strategy to make those monthly payments a lot more doable. I find this really helpful if you're going to be in a home for a longer period of time. It can be really helpful to buy down that interest rate if you know you're going to be there for a while. So how do we come up with this down payment and the closing costs? Obviously, we save over a bunch of time. But one other trick that I have found is by putting some extra money into a separate account that's separate from all of your operating expenses. I think when you do this, you're building up to have the stamina of what that payment is going to look like if you own a home versus if you're just renting. Now let's talk about some of the additional sneaky expenses that maybe you've forgotten about or that were never talked about when you were initially thinking of purchasing a home. So obviously we've talked about the down payment and the closing costs, which are the bulk of the things, but there are a handful of other sort of quote unquote hidden expenses that you really need to be aware of. One of them is the appraisal fee, which is required when you go under contract for a property. This appraisal is done by a third-party company and is ordered by the lender as a checks and balances system to make sure that a property actually is worth what a buyer is willing to pay for it. And this appraisal typically runs somewhere between $700 and $1,000. Another important one that gets paid upfront is the inspection cost. Number one, the general home inspection. This will include checking all of the windows, the mechanicals, the roof, all of the appliances. So this is a really critical one that will save you in the future of any potential major expenses that you may have on the home, and it's definitely worth every penny. Depending on the size of the home, I typically see this fee somewhere between $300 or $400 all the way up to about $1,000, depending on the size of the home. Some additional inspections that you may want to do is a sewer inspection, a radon test. These are great things to make sure that the home is in the condition that you think it is, and that you won't have additional expenses from putting in a radon mitigation system or needing to do a sewer rebuild or a sewer clean out. The other one is potentially doing a mold test. If when the inspector comes through, they see anything that may give them the impression that there could be mold in the home, that's a great additional one that you may want to have done as well. Between both of these, you're probably looking at another couple $1,000s. Were you aware of any of these hidden costs before today? Drop a comment below with your thoughts and experiences. Okay, let's also talk about, in addition to some of the costs and the down payment, there is also something called reserves. So it's important to have extra money set aside in case of emergency. If you lost your job, they want to make sure that you have some money in reserve in your account that you could then cover your mortgage payments. The bank will usually want to see somewhere between 3 to 6 months of reserve in case of that emergency. We always joke with buyers when they close that, it's the cost of homeownership. There always are different things that come up. So it's really important to have some money set aside for that. So you have your down payment, your closing costs, some additional expenses, and then you also need money for reserves. So these are kind of outlining all of the different costs associated with purchasing a home. It's really important to get dialed in on exactly what these figures look like. So talking to your real estate agent, your mortgage lender, and a financial advisor is really the best advice to make sure that you know exactly what kind of costs you're talking about so that you don't end up over your head. There's nothing worse than falling in love with a home that you can't afford. If you're feeling overwhelmed by all of these costs, I am here to help. Click the link in the description for a personalized consultation so that we can navigate the home buying process smartly. If this video opened your eyes to the real cost of buying a home, give us a like, subscribe, and hit the notifications icon to stay updated on more home buying insights.